Are you looking for a grossly undervalued stock with market-beating yield and double-digit dividend growth rate? For dividend investors, there's no better feeling than buying stock in a company at a great discount with a rapidly rising dividend that's rock solid, especially in what looks like a generally overvalued market. If that's you, you're going to want to stick around. I'm Jonathan, and we're talking about a historically undervalued Best Buy stock in today's edition of Constant Cash Flow. The retail sector took a massive hit to end 2021 as some initial retail sales numbers panicked the overall market. Fortunately, sales rebounded strongly for the holiday period. I believe that Best Buy, ticker symbol BBY, is poised to see a huge rally in 2022 with growth boosted by large share buybacks of a cheap stock. Retailers face an uncertain time period entering 2022 with the impact from pandemic pull forwards in the electronics space leading to some possibly soft sales this year. It saw sales peak back in fiscal quarter 1 of 2021 when revenue surged 36% on the back of comp sales growing 37%. BBY slumped from a high of $142 in mid-November to right at $98 as of the making of this video. This $44 dip in the stock price alleviates any valuation questions that might have been swirling around in the minds of investors, and I see it currently as a very cheap dividend stock. But don't take my word for it. Let's see why. Best Buy's price to earnings has hovered in the 13 to 17 range for years, but with the recent massive drop in stock price, it currently sits at 9.68, showing a great value for investors if you believe the company will continue to grow from this point forward. Management slightly raised guidance for fiscal year 2022 and is aiming for total revenues of $51.8 billion to $52.3 billion. This would equate to 9.5% to 10.5% growth over last year's $47 billion in total revenues. Best Buy's revenues were declining for a period between the years 2012 to 2017, but have risen steadily over the past 5 years. At $52 billion, the midpoint of management's revenues guidance, Best Buy's total revenues will have grown by 32% over the most recent 5-year time frame. This is pretty impressive considering all the investments they've needed to make over this stretch towards creating a more competitive online presence, upgrading fulfillment and delivery capacity, and working to modernize stores. Ever since direct-to-consumer fulfillment channels began taking sales away from Best Buy in areas such as CDs, DVDs, and gaming, they've needed to make up for lost revenues with products such as fitness wearables, wireless headphones, and smart appliances. Best Buy is also looking to draw and retain more customers through membership programs like their newest one, TotalTech. They're also looking to leverage their technology expertise to help make advances in the healthcare space. This started in 2018 when Best Buy purchased GreatCall for $800 million and followed this up with a $400 million acquisition of Current Health. Best Buy has brought these purchases together to form Best Buy Health, enabling at-home healthcare through the use of advanced technologies. Best Buy's share price was at its highest value in November of 2021. Not surprising considering the market's general overvaluation. But in its retreat to $98 now sits just $4 above its 52-week low, which is always a sign to take a closer look if you're confident in the core business of the company. EPS, or earnings per share, is at historically high levels, currently sitting at $12.30 after reaching a low of $4.74 in 2020. I personally believe that the ongoing global supply impacts are already priced into the stock at $98, and it has plenty of room to grow. Even if we take EPS at the previous high of $10.61 in 2019, we see a potential share price of around $115, and I believe that's very conservative. If we take the 5-year average EPS of $8.51, we have a potential share price of $144. I think this stock falls somewhere in the middle, giving us around $129, as it was definitely overpriced at $140. That gives us a 31% upside on the share price alone for 2022. BBY has also been constantly decreasing its outstanding shares from 213 million in 2013 to today's 96 million, and they show no signs of decrease in their buybacks. This is a promising sign to investors. Best Buy is only carrying $1.2 billion in long-term debt versus cash in hand of $3.4 billion, showing it has no liquidity issues and technically could pay down 100% of its debt at any time. BBY currently boasts a 2.8% dividend yield, and the management team has been very generous with their dividend raises in recent years. This past February, Best Buy rewarded shareholders with a 27% dividend raise, extending their streak to 17 consecutive years of paying dividends and 8 consecutive years of rate increases. And it has a 5-year dividend growth rate of just over 20%. At this rate, the dividend payout will more than double every 5th year. Now that is something I can get behind. Another key point is that even after Best Buy's most recent dividend raise, their payout ratio sits at a very sustainable 27.9%. This ratio has actually been falling the past few years, even as the dividend has grown at a rapid pace. Not only is Best Buy's dividend ultra safe, but there still remains ample room for future dividend growth. Just 6 years shy of procuring the status of dividend aristocrat, I believe that it's highly likely investors will see another dividend raise soon. Raises to Best Buy's dividend are normally announced in February, so it'll be interesting to see what management offers investors this year. Like all equities, an investment in Best Buy is not without risk. As investors, we're responsible for understanding these risks in order to assess whether they fit into our time horizon, overall goals, and risk tolerance. When assessing Best Buy, I currently see 3 key risks that require a closer look. Over the short term, Best Buy still suffers from issues with the supply chain. Many of us just blow off the supply chain problems after hearing about it for so long, but this is still a very real problem facing numerous industries today. Many of the products sold at Best Buy are large, complex products being manufactured halfway around the world, which calls for a stricter set of shipping procedures. Also, with so many bottlenecks worldwide, Best Buy is forced to pay more for storage as merchandise remains stationary for longer. Then on top of this, labor and fuel prices continue to rise. While I do believe this will be worked out relatively soon, this is something that will continue to affect the bottom line over the ensuing quarters. Second, Best Buy operates in the highly competitive consumer electronics industry. Their products suffer from extremely short life cycles, a need for constant innovation, a need for superior management, and the ability to find new and creative ways to attract and retain customers. Fail, and Best Buy may find themselves losing market share to competitors like Walmart, Target, and the brick-and-mortar killer, more commonly known as Amazon. Finally, there remains the risk that Best Buy's management is unable to successfully steer the company into the new age of e-commerce. The pandemic has greatly accelerated the shift to digital shopping, putting a heavier burden on retailers that rely on sales from brick-and-mortar stores, as Best Buy does. So far, management appears to have effectively made the transition, but constant vision and change will be required to stay ahead of the pack. As an avid video game player throughout my youth, I can still feel the childhood excitement and wonder when pulling up to one of Best Buy's massive blue box stores. But fortunately, Best Buy has grown to represent so much more than that. I believe the weakness experienced by shares of Best Buy since reporting Q3 earnings in 2021 has presented savvy investors the chance to accumulate shares of a quality business at a great price. I rate Best Buy a strong buy at anything below $110. If you found this video helpful in any way, I would greatly appreciate it if you pop that like button and subscribe. Thanks for hanging out with me to the end. You guys are truly awesome. See you next time.